You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you very much, Shelby.
Dan, the USDA WASDE report is coming out today, but as we're talking about this, what are some pre-report expectations for that report?
Well, I think it's good to remember that this report is coming out in an atmosphere in the grain markets that have been pretty bearish price wise, bullish in terms of production. That's the issue at hand is even though there are pockets of dryness, et cetera, that in general crop ratings good or as good as has been measured. Ratings can be subjective, but still, what we have right now is the idea that we'll have strong crop production figures, good crop yields. Very unlikely the USDA will change any of their record high projections, and especially given the info that's out here. If they do anything, might raise it. So you've got that information building on what came out of the acreage report right at the end of June, acreage and the stocks report. The stocks report, uh, if that feeds into the WASDE supply demand balance sheet estimates, it'll probably be in terms of feed residual figures, particularly on the feed grains, maybe some other changes around the edges on wheat and or soybeans and other crops. So we have those changes coming. Although you and I don't talk about it a lot, there's big changes afoot, or notable changes afoot in cotton acreage. So we'll be watching to see how that works out in this cotton supply demand balance sheet. And again, grain sorghum's quite important for us here in Kansas. That there's a drop in acreage. I really am curious to see how that will work. That will work out in the Kansas supply demand balance sheet for sorghum. But anyway, the pre-report expectations are basically for corn production to be about 15.7 billion bushels. 15.8 was the last projection. But by my own calculations, taking the USDA harvested acres figures times the 181 bushel per acre, I came in closer to 15.6 billion bushels for corn. So we'll see, just a difference of opinion, but we'll see where that comes about. But 15.7 billion bushels will be the numbers here at the top of the hour that the USDA will be aiming for. At least that's what the trade thinks will happen for corn production. For soybean figures, a little bit lower projection. Again, 4.334 billion bushels projected by the analysts. That would be slightly lower than what had been projected in the June estimate. And again, same issue. When I plug in the numbers for soybeans, I've got just a little bit lower number than that. Again, just staying strictly by the same yields times the harvested acres. So we'll see where all this comes out. So my leaning would be that those numbers, that the trade estimates on average are a little bit high, and if they do come in that way and they cycle through the balance sheets to give lower ending stocks, it might provide some moderate support for the crops for prices thereafter. And of course, we're looking at old crop ending stocks for corn, soybeans, and of course the number that came out on June 30th, 31st, 30th, I think, on soybeans is the ending stocks figure for that marketing year. Because it's representing the June 1 number. So we'll see what how this the old crop figures work themselves out for the 24-25 marketing year. And now, of course, for wheat, we're in the 25-26 marketing year. That's starting June 1. We're projecting out to September 1 for corn, soybeans, and sorghum. So we'll see. And again, probably the number to watch will be the corn market as kind of the lead bellwether for where we're going. In the June WASDE report, we projected 1.75 billion bushels. Well, with a little bit lower acreage, analysts are coming in at 1.72 billion bushels, a range of 1.57 up to 1.85. My own thoughts are is that number could be lower than that. But again, I'm basing that completely on almost completely on the acreage changes. So we'll see whether the trade estimates or, and pardon me, some of these other ideas come into play. And the soybean figures just about the same, maybe a little bit higher. So we'll see where all that goes. So I think there's just lots to watch to look forward to see what happens in those reports. We will get estimates of wheat production, and the June U.S. wheat production figure was 1.92 billion bushels. The pre-report estimate is for 1.915, and so just shaving around the edges. Hard red winter wheat number, that's awfully important to us here in Kansas, projected at 782 million bushels. In the June figure, projected a little bit lower, 773 million. And Shelby, I don't want to be a cynical, but I understand the difficulty of projecting these figures. There's a lot of room for surprises on these wheat classes. And if we were in a wheat market scenario where we had a lot tighter stocks to use, et cetera, then some of these changes from expectations to actual what the USDA actually projects coming up tomorrow for early July would have more impact on the market, but really not a lot right now. So we'll see where all that goes. I think there also will be projections for South American corn, soybeans, particularly focusing on Argentina, Brazil. Pre-report estimates aren't for a lot of change. However, something we'll be watching, particularly in the corn market, is that in the June report, the size of Brazilian corn was projected at 130 million metric tons. Pre-report estimates are for like 132.5 million. So to the degree we come to that or not, that'll be a big deal. So we have this report in a few minutes. It lands right in the middle of a whole bunch of other market trends. Most of them pretty pessimistic, pretty bearish. And so if it comes out, I guess the question of the day is if these report numbers come in and don't give any signal for market movement. If they're about what was expected, then does the market just stay at low levels or does it plow lower yet? I would tend to think that here we're in July, not August or September, that would probably go sideways some, just because we still have uncertainty ahead of us. But if these numbers came out and we if something doesn't change in terms of crop production expectations and how the balance sheet will work out, if you had a bearish report came in out in August and or coming into September, then we'd be at risk to go even lower for prices than where we're at. So we're kind of bracing ourselves for what could happen on that. But so you've got all that going on. I think as you and I were talking before we came on air, what the one good thing that's happens and in the ag side with low prices is that you really do expand the demand base. If anything, you're using more grain earlier on than you had anticipated. So you could be an optimist in this situation and look at how our feed usage, our ethanol usage, our exports are all positively affected by that. And so if we are going to have sizable supplies at low prices and we have lots of use, then we're on our way to keeping ending stocks at a they would be lower, but you'd put yourself in a situation where, as the usage happens, you're able to clean out excess supplies sooner, and then perhaps when you as you move through December, January, February, off into spring of next year, you probably change the situation. And of course, low prices, which we now have, will probably eventually affect people's plantings of crops, and then we'd have to see if we're more optimistic for corn or for soybeans going forward, or these other crops. And so I guess we have this report coming. It's happening in a pessimistic point of view or pessimistic time frame, but we'll see where the markets go. I would like to add in the midst of all this, when you look at cash prices for grains, there's some interesting things happening in the wheat market. Of course, the cash price is pretty low, generally out to the west, 460, 465 are the top prices out in the Garden City, Colby area. But you have some fairly decent prices, 542, 553, thereabouts in Hutchinson, Salina, that central corridor. Uh, Again, about 470 out in the Pittsburgh area. So cash prices reflecting some fair differentials in some of these areas. Probably in that central corridor, that's where we'd expect exports to initiate, originate from, at least to start with. And we have some pretty good prices there. Some of the new crop bids for 2026 are interesting in that you've got the 549 a 549 bid for the next marketing year for 2026 in Salina, Topeka, 544 in Hutchinson, 539 in Pittsburgh, 534 in Garden City. So you've got some okay bids out into next year. I would add in that low prices have helped us export wise. We had a pretty good week of U.S. exports. Had a very good week of hard redwood wheat exports. So the best cure for low prices is low prices. We've continued also to see pretty strong corn exports. It's just the train that keeps chugging along, and that's a good sign eventually for whittling down stocks and leading to leading to higher prices eventually down the road.
Dan, I appreciate you taking the time to join us today.
Thank you very much, Shelby.
That was K-State grain economist Dan O'Brien with a grain market update. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead.